If you want to consistently make money trading, these 5 scalping patterns are all you're going to need. I've used them in my own trading strategy for years, making thousands in profits just from these patterns. Now we'll start with some of the more basic foundational patterns that are crucial to the more complex ones, and then we'll build into the higher win rate ones that are going to make you the most money. So the first pattern I want to start off with is a head and shoulders pattern. Now this pattern is really basic, and even if you already kind of know what this pattern is, there's a couple keys to this pattern that I've found over time that are really important, and also keys that aren't as important as other people might think when the reality comes to actually trading this. Now, if you don't know what this pattern is, the basic idea is it's a reversal pattern. We're looking at a bearish version, and what that means is you're looking at the market in an uptrend to actually reverse. And so how the pattern works is it's basically just the market is moving up in an uptrend, it's making higher highs and it's making higher lows, and then all of a sudden it makes a low here that's kind of the same, and then it actually makes a lower low. And so essentially what you're looking at is kind of a head here with 2 shoulders, kind of, a person. And so that's why it gets that head and shoulders name. But the main thing you're looking at here is often you have something right here called the neckline. And so what that means is, well, you're starting to see some bearish pattern here because we've made a lower high right here. And that's a signal that the market's not as strong anymore. If it was still strong, this high here would have, made a newer high, but instead it didn't. And so the idea is when it breaks this neckline here, or essentially this double bottom that the market's made, it's going to, flush lower, and that signals a good spot to either buy, betting the market's gonna go down, and that it's gonna go down from there. Now, the reality of this pattern, it doesn't always show up, any of these patterns doesn't really show up like that. A lot of the times it kind of looks a little different, right? But here you can kind of see the same thing. We have a move up, just kind of looking at the swings, it's made kind of a bigger swing there, and then here it makes a lower swing here, and then it makes a lower high. And so the main thing is you're kind of looking at these 3 swing highs here, how they relate to each other, and then you can also look at these lows, and this being a lower low right here, I actually think makes the pattern even stronger because it's already showing you that it's shifting into a lower low, lower high kind of downtrend, which then is a good signal for, this breaking lower here. Now, some keys to this pattern that I think you want to pay attention to is you want, going into the pattern, and we'll look at some real examples of this later to show you more and kind of not just a small picture like this. You want there to be a big move up into the pattern. And so what this does is it allows there to be essentially a gap in the market of an unhealthy move, that when it starts to come up here, do this head and shoulders pattern, that when it does break lower, it's likely to give that move back up, which is very important for you as a trader trying to actually profit from this pattern. If it doesn't have that, it's more likely to just kind of sit around and chop, and maybe it reverses a little bit, but it's not as good as a profitable opportunity. And that's the key when it comes to trading these patterns, is that you can actually profit from them. And then the other thing is having larger than normal rejection bars, like here you can see, from that kind of final swing high, essentially the head of the head and shoulders pattern shows you a more stronger change in shift of momentum. Here you kind of have, it had a big bullish candle here and then a reversal, but they kind of kept going up. And then here it just, with the final move up, it had a much stronger rejection. And so that really shows that the market is starting to shift. And that's what you want to be doing with these patterns, is you want to be reading into what the candles look like versus kind of just saying, okay, well, it's, kind of fitting the theory here. And so to shift to kind of what this looks like in more of a reversal, bullish to the long side, and also some unimportant factors. Now this I'm looking at is an actual PDF that you can download, and it will go through a lot of these patterns we're going to talk about. I'm going to obviously go into more detail here, and there's a couple of patterns later in the video that aren't in this PDF, but definitely go in the link in the description of this video and download this PDF. It'll be really good for you to just, come back, look, and even just glance at what are these unimportant factors for this. And so to flip this, on the bullish side, this is just you're betting that the market is, in a downtrend, that it's going to find some support and reverse back up. And so, it just looks like that on the flip side, where it's just instead you're looking at the lows, and you have the lows are starting to, shifting from lower lows, they start shifting to a higher low. And then you can have this neckline right here as well. And so the reality, and an unimportant factor, kind of brushed in this in the last one, is you don't need this neckline. It does not have to be flat like this. It can be other ways. And kind of like the last one too, is just looking at this, is from the head and shoulders pattern here, you have your lows, and you can see that I think because this is a higher low than this one, that's kind of confirming the head and shoulders, but also having this swing high here be higher than this last swing high, again, it's even more confirmation that it's shifting from a downwards trend into making lower lows and lower highs into an upwards trend where it's making higher highs and higher lows. And that's essentially, just drawing that right here, that's essentially a head and shoulders right there. That's what they look like. And so it's kind of just the raw basics of looking at price action and reading the market. And so, unimportant factors, that neckline, it does not need to be flat. And then the other unimportant factor is that the head of the head and shoulders, it doesn't have to be way farther than the other swings from the shoulders. You can see here, these are pretty much the same price. And so it's almost like a triple bottom, but it's still showing you that importance that the market is bottoming here. And even with this one right here, this candlestick shows you a really good rejection. This candlestick essentially shows you the market opened here, sold off, attempted to keep going lower, but the strength of the market came in here and pushed it back higher. And so it then reversed up and then kind of closed kind of here. And then the next candle you can see just kind of was a massive green candle, shot higher. And that kind of is how the head and shoulders works. And I would like to get in basically here because I think this red candlestick is a good enough confirmation. And obviously I have other things in my checklist, but that would be where I would get in long, looking for the market to reverse. And again, going back to that important factor, you can see here's another example of there is a nice flush lower and a move lower that it makes it likely for when you do get in, there's profitable move in this trade. Now the next pattern is another reversal pattern, and it's called a reversal flag. And so this is very similar to head and shoulders in terms of the theory. In this case, it can look like a triple top, but the idea is, again, this is a bear, so we're betting that an upwards trend is actually going to reverse down. And instead, what you're looking at a lot of the time, the main theory of this pattern is it's just in an uptrend, and then it just starts to sit there, showing you that momentum of the uptrend has dwindled and it's starting to slow down. That's a lot similar to the head and shoulders pattern, but the head and shoulders pattern is a lot more volatile in a way. Instead of the reality, this is, it just comes up, it has good momentum, and then all of a sudden it just kind of starts sitting there. And the key to this is looking at the candlestick. You have that big move up with big bullish candlesticks, and then looking at all these, it's just starting to kind of sit there. There's a lot of dojis. There's a lot of just essentially back and forth movement. And that just shows you that the market has just lost its steam. And where you want to be using this, you don't want to just use this randomly. You want to be using this in areas where you think there is let's say there's a big resistance zone up here. That's what you want to couple this with. You think, okay, I already think that the market's going to reverse here. It slammed up into this level and then started to sit here. Well, that gives it another reason that it's likely to lose steam. Sellers are going to come in and then push this down. And then because you've had that big run up into that level, you're likely to capture a profitable trade because there's movement in the market available. Now, keys to this pattern is, like I said, you want strong movement into that level, basically. You're essentially looking for the market to be exhausted here, lose that momentum, and reverse back down for you. Now, another thing is, essentially it's going from one direction to sideways. That's just the basics of a pattern. That's actually why it's called a flag a lot of the times, because it essentially the market just moves up and sits here, and that kind of looks like a flag. You can also again flip this to the reversal flag of that other side, a bullish version, where again, it's coming down into an area. It's showing you some loss of momentum. There's a lot of dojis. There's candles that are just back and forth. You know, basically it switches from you having a lot of red candles to there's green, there's red, there's green. And so it's just back and forth, and there's a lot of wicks all over the place. Essentially, there's not much movement. And then essentially with that, you're looking for there to be essentially a small range here. And then you essentially are buying the breakout of that range. And so you're then betting once it breaks that, it's gonna give back up whatever move it had down. That's kind of a common target I use. We'll talk about that a little more later with a real example. And then some unimportant factors is, you know, that it consolidates in a box perfectly. You know, it doesn't have to be where the lows and the highs are perfectly flat and even in a nice little range. It can be all over the place a little. The main thing is that it's sitting in somewhat of a range. Compared to the head and shoulders is you don't need clear swings in here. You can kind of see their swings, but again, just kind of looking at it with, you know, almost blurred eyes is a good way to sometimes think about it. It's just kind of sitting there and chopping around. You know, you don't need to read into every little movement of each candlestick all the time. Sometimes there's important times to do it, like with that last head and shoulders example, but with this one, you don't need to. Now, one important thing that isn't on here is that if it starts to just sit there for a long time, then it's just lost all momentum and it's actually not worth a good trade. This is something that'll save you money in terms of taking bad trades. If it comes down here, you know, it's at a support level where you expect a bounce and it starts to sit here. You know, it looks good if it breaks out for a little while, but then it just starts to kind of continue to sit there. That's when I start to say, okay, I'm not interested anymore. It's lost all sort of momentum. At that point, it gets more likely to where it's either gonna fake out in one direction and then keep going lower, or, you know, it'll fake to the low side and then keep going higher. And so that's kind of when I start to shift how I approach this, because it's more likely that it's kind of just used its steam and there's more of an equilibrium of buyers and sellers at this area, versus what we're looking for here is there to be an overextension of either the sellers or buyers, and it's gonna have that snap back that we can profit from. Now, the next pattern I wanna go into is called the 3-line strike pattern. Now, this is more of a smaller candlestick pattern, but the idea is I use it a lot for entering in with these patterns that we've just seen. So you can kind of couple this with these other patterns. And so the theory here is this is the bearish side. We're looking, so essentially we're in an uptrend and we're looking for a signal to go to the short side. And essentially all this is there is a consistent uptrend, and then all of a sudden you have a big reversal, giving back all of those candles. Now, the theory is, you know, that it's, you know, a couple candlesticks and one candlestick gives them all back. You don't always need that. Sometimes it can be 2 candlesticks, but the main idea is, you know, again, we're looking at the price movement. What is the price doing? And here the price is showing you that it was in a nice methodical move up, and then all of a sudden the momentum switched and it gave that back up. And we like to, in terms of reversal trading, switches of momentums and changes in volatility like that are really good, because a lot of the time it catches a lot of traders off guard that are, you know, in trades betting the market's gonna go up, and they have to get out of their trade fast and it will flush lower, making a good profit. And so, you know, it can sometimes be where it's in kind of a chill, slow uptrend, and then you get a couple of dojis where it's just starting to sit there. You know, you could read into the candlesticks and say a little bit, maybe this is kind of, you know, like that flag pattern that we just talked about, where it's just kind of going up, it's losing that momentum, and then you have that big shift. And so that's essentially what's happening here. Is this is a nice confirmation of saying, okay, wow, that shift is happening. You know, it's having this basically this 3-line strike pattern, and I can get in at kind of the low or the close of this candle and bet the market's gonna go lower. And so that's a really nice confirmation. Now, keys to this pattern, of course, is don't use it by itself. And really with any of these patterns, don't use them by themselves. You can't just go into a chart and, you know, see a couple of things and then just buy, right? You have to have this, you know, coupled with support level or resistance level in this case for a short. And then if this was combined with, a big head and shoulders pattern, or this is just the right side shoulder, this is a great trade to get in on because you're, going into a resistance level, and then you have this head and shoulders pattern, and then you have this candlestick triggering for you here to get in. Now, another key is you want this candlestick to be big. It helps that it gives back a couple of the previous moves of the candles, or just the size comparison is much bigger than the last few candles, because again, it shows you that switch in momentum. Now, on the bullish side, same thing is, the reality is sometimes it can be a bunch of candles that take a while, and then boom, you have a massive reversal. And so sometimes in these cases, when the candlestick is this big, it can be kind of hard or scary to get in because it feels like you're kind of chasing. But if the other factors are there's a big gap and your target is way up here, that can be really worth the trade to get in. Some of those trades move really fast and are very favorable to get in. Now, unimportant factors of this, again, are it doesn't matter as much of what the candlesticks look like leading up to it. The main thing is it's kind of showing you a slow momentum or a certain speed of momentum, and then that there is a massive switch in momentum. And the other thing is it doesn't matter which candlestick makes the low. In this case is this candlestick is making the low, or this candlestick is, making the extreme high. It doesn't have to be like that. In this real case right here, this doji candle actually made the low, and then the next candle, which didn't have as low of a low, it ripped higher. And again, the pattern is still valid. So you don't need to don't try and get bogged down in those little details. The main thing is understanding the main psychology and price movement of what is going on in these patterns and what they're telling you about the market. Now, let's get into some of the more complex ones. And the first one here is a trap, or what I like to call in another way, a failed breakout. And the theory behind this essentially is you have a resistance level here, and the market comes up to this level and an uptrend starts to slow. This is actually kind of a great example of if the market came up here and started just chopping along, and it got too choppy to where we didn't want to, use that flag reversal pattern to break lower. And so we kind of were sitting and waiting. This is what you would use in that next step, to where the market's sitting here, it's butting up into this level, and it actually breaks through. And so a lot of the times you'll have breakout traders or people that already bet short because they see this level, and so they have their stop loss here. And so it'll break that level, essentially get those people out of their trade. There'll be other people that get in here saying, wow, I like this, to break to the upside. It's already in an uptrend. Trend is your friend. I want to play with the trend, and I think this is going to keep going higher. They'll get in long as well. And instead, the market, not every time, but when this does happen, the market decides to flip on those people. So all these people that bought long are now losing money as this goes down, and who knows where their stops are. Maybe they're here, maybe they're down here, I don't know. And then the other people that were betting are now seeing this and wanting to get back in. The people that were betting short over here, they're seeing it come back in, and they're going to want to get in. And so that's kind of a double whammy of it has more likelihood to then push the market lower and continue that reversal. And so I like to get in once it kind of confirms that it's kind of a failed breakout like this. And so here's kind of a more reality, right, example. Here is a good example of that kind of just consolidation where it's just sitting there and it's just lost all momentum, and it's not worth trying to go any one direction. And instead it starts to have a breakout here, and then boom, it has a big flush candlestick there. This is actually a great example of that 3-line strike pattern. You can see it here very clearly with a nice move up here, and then that big candlestick giving back all of that. And so that is a really nice signal that buyers are kind of getting screwed here, and it's more likely that it's gonna push lower. And this is actually an example from a real trade I've taken, and it had a big uptrend right here. And so my target was to give that trend back up, and so I actually got in. I waited a little bit more. I didn't want to get in at the low of this candle. I actually wanted to see how it kind of responded, but I believe I ended up getting in somewhere here. I have an example of a trade on the channel somewhere, but got in there. It chopped a little bit, for a little bit longer, but for me, the confirmation of more likelihood to reverse was up here. And so then it moved lower from there. And so keys to this pattern is it's best that this move is not normal. That it's not just if you have, let's say if you have a support level or resistance level up here, and you're just in an uptrend right here, and it's just continuing higher. This is not a potential failed breakout as likely because it's just kind of in the same methodical move versus this one, what looked more like this. It had kind of a move up like this. It's kind of sitting here. You've already noticed that, okay, the trend is already shifting. It's already gone from up to sideways. And then it has this very fast move here that shows essentially that, okay, it's something's changed, something's different. And so I always find that having that kind of overextension of the current trend, and we'll talk about this more in a minute, of kind of an exhaustive move, it causes it to be more likely to reverse in the other way. And the other key is that it kind of happens pretty quick. You don't want this thing to break out and then come back and start to find some higher support, because that makes it more likely that it's just going to keep going higher. You want it to be where it's clearly tried to break out and then all of a sudden it's flushed back lower. The more severe and quick that is with no pullbacks, like here you can see green candle, green, 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 and then red, red, red. And it doesn't have to be one massive candlestick like this. We'll look at some examples, but having it kind of be more of one directional is a lot stronger. And so on the flip side, because you can have this on the long or short side as well, same thing here. You can see the market's kind of just sitting here trying to find some support and not really sure which way it's going to go. And then all of a sudden you have a big candlestick shift lower here. I like to often think of it as an attempt to keep going lower, and that attempt fails and reverses hard. In this case, it's a big one candlestick in the one direction, and that's also really good too because it shows you how much the market is overextended, in this case to the low side. And before here, because it's so choppy like this for so long, I often find when it goes from chop to big move like that, it's often more likely to snap back. And so in this case, it kind of snapped back. I think it's kind of confirmed once it kind of gets up here. And then, it kind of continues to shoot up because it's now had that catalyst, as you could call it, to break it out of this kind of dull, doing nothing mode that it's in. Something has clearly changed here. And so it's going to reverse and shift from there. And so some unimportant factors that you don't really need to pay attention to, that at least I don't, is the volume of the breakouts. I've tried looking at volume, but I think trading, keep it as simple as possible. And I've always found that whenever I try and add volume to look at something like this, I've tried it a few times and it just adds confusion. And in reality, if you're just in tune with the market and following these patterns correctly, it's going to, these snaps work out really well. And then the next thing is it doesn't necessarily have to break a major support you're looking at. Sometimes you can see that, let's say our support zone that we're looking at is kind of like this. And so the market's kind of already bottoming here, and then it has a break lower here and it reverses. And so it technically doesn't break the low of, if we have a big move down here, that's where kind of that low is drawn, and then it's kind of come here and then snap back lower. It doesn't need to break this low to be considered a failed breakout or a trap in this case. What I'm just looking for is that it's had this kind of chop and it's made this move and then reversed. That is really what you're looking for, and that's going to be what shifts it really fast in one direction. Now the last pattern here is not on that sheet, but I've kind of talked about a little bit, is when the market is overextended or overexhausted. And so in this case, this is a great example from just a couple of days ago. I'm looking at the 5-minute NASDAQ futures right here. Again, like you can trade this on any market or time frame because again, you're reading into the candlesticks, and those transcend all markets and assets, because it's a reflection of what's going on underneath the hood. And so for this, going into this day, This is essentially where the market opened. And so I'm looking at, you know, the market's kind of been in kind of a sloppy uptrend. But in terms of zones and levels, I'm looking at, okay, there is a resistance zone up here and, you know, support level down here. But the main thing we're looking at is it's come up here, it's kind of chopped, and then it's come up here and it's made a high. And so I'm looking at, you know, we're kind of at a high here. And, you know, as it kind of moved up, I think I shifted this up a little just to kind of look at the highs more. But essentially I'm looking at, you know, I think we could come up here and reverse and, you know, give this back up and go all the way down here. And so now going into a 1 minute chart, because that's what I trade, the market for me opens up at 7:30 and you can see it kind of just started to chop here. You know, and so there's nothing really interesting to do there. You just gotta sit and wait because you don't wanna be trading in that chop. It's just not worth the risk. And then all of a sudden the market just starts to kind of skyrocket here. And you can see that that's really fast in one direction. We've been in kind of a chop. We're now broken out of the highs that we were looking at here. You know, this is essentially, if I zoom forward on this as well, this is essentially breaking out of these highs from the previous night, actually. And so it's broken out of the previous highs and it's a massive move out of nowhere, it kind of felt like. And so for me, I'm thinking that this is likely to then snap back and reverse and give that back up, especially because it's kind of a failed breakout and it's also giving us that one directional move. Now my candlesticks on my charts are white and blue, but these, you know, they're all the same. You know, they're all bullish candlesticks. And then from there, kind of going forwards, is it has that kind of big snap back and it starts to kind of pull back from there. And now it has one more kind of pullback here. And now this is a pattern that I didn't really talk about much in this video, but I'll talk about later in other videos. This is kind of just essentially a lower high. It's kind of a pullback. And then from there, it's a great signal to get in short because it's kind of showing you that, okay, the market's big, strong move. It tried to make a pullback here. You know, if it was strong in an uptrend, it would have kept going up here. But instead, that reversed. And you can see it's almost like a 3-line strike pattern here, giving back these kind of 2 candles and most of this third one right here too. And so from there, you know, then it just kind of puked lower. And then big picture wise, is it, you know, gave back that whole move all the way to the other end of this range it was in. And so that's kind of how I look at trading these big swings in the markets and using these patterns. Now let me show you this on a small real account so you can show that you can start with a small account, use these kind of moves and patterns to your benefit and grow a trading account. And so just to remind you that if you want that PDF, just get in the description below. It'll walk through all those kind of pages we looked at, and then it's actually got a bunch more in there as well. I didn't go through the whole thing. And so just looking at right here, pause the video and kind of think about what patterns you're seeing that we just went over. There's a couple here that you can see. So I'm just gonna give a couple seconds, just pause it and just kind of see if you can see what these patterns are. And then from there, to kind of walk you through what I'm seeing is, you know, we kind of have a big resistance level here. And the market's come up in, you know, kind of just a methodical uptrend, right? And then all of a sudden, we have a massive move up, causing, in my mind, a big shift. You know, this is out of nowhere. The trend was clearly just kind of chugging along, do its thing, and then boom, it has a big move. And so for me, that's a switch in what's going on, an overexhaustion usually. And so from there, it moves up, pulls back, has one more attempt higher here, and then kind of to zoom in on this area, looking at these candlesticks as well, is there's a 3-line strike pattern here. It kind of shows up a little funky, but you know, it's pretty much just a couple of sideways candles, and then it slowly moves up, and then over this candlestick here, it moves up and reverses, and then the next candle, it just gives it back up. And so for me, I, you know, waited to see a couple candlesticks, how it responded. You know, that's kind of the intricacies of getting in short and just playing these strategies over time. You'll kind of see how you like to play in a couple spots, but then I entered in on a trade there, put my stop loss above here because my thought is, hey, if it comes up here, I just want to get out. You know, this is obviously a strong move. If it's going to keep going higher, it's going to go pretty quickly. Or if it reverses and gives back this move up I like, it's going to happen quickly as well, because these moves, they generally happen quickly. And so this is again on a small account. I'm risking about $100 here, maybe a little even under. I don't quite remember. But the big thing I'm looking for here is, zooming it forwards a bit, is I went to break even here once it kind of gets moving in my favor. And you can see I drew this support box because my thing is I'm thinking that it's gonna, a lot of times like we talked about earlier, with these targets or with these moves, a good target is it gives back this kind of overextension or overexhaustive move. That happens a lot of the time. And once it kind of gives back there, then it's kind of, it's back more in equilibrium. And, for me, my edge is gone. I have a good understanding of how these move. I don't have a good understanding of how they move after, but that's okay, right? You only need 1 or 2 patterns to be consistently profitable trading. And so this is my pattern, right? And so for me, I liked the idea of scaling out of my trade. This is a little more advanced, but I, broke up my stop losses of saying, okay, I want to get out of, 3 out of 5 of my contracts right here if it decides to snap back quickly. And then I also want to just kind of give this other one a little more wiggle room if it's going to bounce here and then keep going lower. This can be a big switch in the overall trend. And so I want to give it a little room. As you can see, I moved it down there. I do kind of have a kind of mental stop in my head. Now I quickly moved it back, but you can see I'm trying to give it a couple of candlesticks of a pullback here. And then most likely I'll move it down once it kind of starts to reverse, or kind of gets to either 1x my risk. The idea is I want to give it some wiggle room, but I don't want to try and give it, give this whole swing back up. And so kind of it starts to reverse there. And so I'm going to move my stop down now because this is kind of a little micro top. I think if it's going to make this little micro double top and keep going lower, that's a great spot for my stop, because if it breaks this, I think it's, it's kind of not doing what I'm looking for. And that's how I like to manage my trade, is if it's doing what I want. And so from there, it just kind of chopped around a little bit and looks like it was breaking lower here. And so it starts to break lower. I'm moving my stop down. And again, it's still kind of in this range you can see here. And this kind of looks like a little bit of a little mini fail breakout, you could even say. And I believe it knocks me out here. And so that trade still closed up at, I think two times my risk. Really good, profitable trade right there, which is, a great growth on a small account. Now, again, to remind you, just make sure to get that PDF in the link below with all these. It'll be really helpful for you to dive even more into technical analysis and reading candlesticks, which is crucial for trading this kind of style. Check out this video right here. I go even more in depth onto the nuts and bolts of how reading into the price movement of the market, and it will flush out these ideas and patterns even more for you.